Welcome back to Metropole Business Center, and of course, today we're looking at startups. Now, according to the State of Tech in Africa report, Kenyan startups defied the COVID-19 pandemic to record an increase in capital raising activities in 2020. The report indicates that the country had the highest venture capital investment per capita in Africa, as it raised 33 billion shillings through VC investments, ranking second in the continent to Nigeria. Kenya has been cited as an easy country to do business in and also has a higher number of expatriates, making it more appealing for foreign investors. Now, the World Bank's Ease of Doing Business currently ranks Kenya 4th in Africa and 56th globally. Now, joining me on the show to discuss the state of startups in the country, as well as the existing challenges, is angel investor and startup consultant, Soud Hyder. You're welcome to the show, Soud.
Thank you very much.
Angel investor, wow. I've never really met an angel investor in person. You must be a rich man. We'll talk after the show.
I think that's a misconception.
Right.
You can start investing with a little money and just having the right networks.
And you're going to tell us all about that within the course of this discussion.
Yes.
But just to set the ball rolling, I mean, you had the statistics. And if we're to really go by what we've had, it seems like things are really looking up in this space. I mean, for someone who's really actively in this space, I would like to hear your perception. What would you say of the current state of startups in the country right now?
So it's been a long time coming. Obviously, the government has contributed in terms of policy, market conditions. Kenya has been ripe for investment for a very long time. You know, we started seeing it with PE money coming into telcos and in the F&B industry. And it's no different with startups. It's just that the difference with startups is like it's much smaller fish, and the other funds are coming in for bigger fish. Kenya has really good talent, and the other thing, mostly on the marketing and business side, a little bit on the engineering side, which is why you're seeing a lot of tech startups. But what changes the dynamics for Kenya is the ripple effect of M-Pesa. You have a payment system that you don't have to physically move money, and most of the country is on it. So a lot of businesses that are thriving now, the ripple effects of having, good systems in the country, which is what we're seeing.
So from what you're saying, so it seems like the environment is not too offsetting. It's almost, favorable. And that's why we're probably seeing, startups thrive, and even like there's so many innovations in that space. However, the problem of access to capital remains, one that's constantly talked about, and particularly when you talk to startup founders. And we've seen also a situation where a lot of people look to the diaspora. They don't really think to look locally when they're looking for people to invest or even tap into their startups, and you're directly in this space. I'd like you to talk about the issue of access to capital, as well as always looking beyond, the African continent for people to fund startups. Is it about time? Like, what needs to be done on that front?
I think it's more of a perception issue, and this is what we face as a local group of angel investors in trying to convince locals to raise money. So even as in our syndicates and the deals that we push, it's much easier for us to raise money from the diaspora than raising money locally. And the reason is, if you look at the most prized asset class in Kenya, it's the land or real estate. In one way or another, and then a little bit on these stocks and or equities and bonds, and there's a lot of investor education that needs to be done to see, at least to sell, that startups are also an opportunity. Obviously much higher risk, but the upside, especially if you have a diversified portfolio, is much higher. So you'd find that people who actually get into startups in Kenya from the expat class, who are already in startups and are investing some of their money or returns back into the ecosystem, folks in the diaspora. And there is, if you look at a lot of the funding, it's coming in from foreign-based VC firms, where they already have that capital, and deploying it in a startup in Kenya is much more valuable than them deploying it elsewhere, or that opportunity is greater. And the other phenomenon that we're seeing is Kenya is being seen as a launch pad into the rest of the continent. So when folks want to invest in Africa, so there's a whole fear of missing out. You're seeing big deals in Egypt, Nigeria, a little bit in South Africa, but Nigeria and Egypt pretty much have much of the bigger deals. Per capita, Kenya, yes, but we're competing with much bigger populations, we're competing with much bigger economies, which is why per capita Kenya ranks highly. Now, Africa is the next frontier. And that has been said for a very long time. So we started seeing it in the PE era, from 2005 all the way till I think 2015, 2018. Still lots of PE deals coming into Africa, but not as much as before. Now we're seeing early stage financing coming through. And the upside for that could be, if you look at, your Paystacks, or some of the Nigerian startups they're starting from zero to multi-million-dollar valuations in a very short period of time. So for early investors, that upside is ridiculously high.
So Soud, in line with what you've just said, the opportunities are obviously there, but you wouldn't believe it, a lot of these startups don't even know where to look. So, you'd say, oh, there's a lot of interest, Africa is the next frontier, but for someone who's in this space, like, where? I've been looking, where should I look? So where would you say are the opportunities? What are the low-hanging fruits that startups can then tap into to just quickly get it rolling? Okay.
So traditionally, it's you start raising from family friends, or they say family, friends, and fools.
True.
Who would listen to any idea. And, that is risky because that money, you get it from an emotional point of view. Someone is trying to help you out. What we are seeing of late is the bunch of accelerators or venture builders in the region, and they're using Kenya as the HQ or launchpad for the rest of East and Central Africa. So the likes of Antler, the likes of I think it is Founders Network, which had the Kenyan chapter had their first graduation yesterday, the first cohort. I think do Mest have a presence here, and then you've got previously used to be the iHub and the NILAB, but that space has evolved. But you're looking now, the topmost accelerator for early stage companies by far remains Y Combinator, based in the Bay Area. But with COVID, it's an online program now, and they have a very deliberate effort now to get more African startups, and some Kenyan startups have been part of that journey. So accelerators, so the difference between an accelerator an accelerator or an incubator, they try to get you to move fast. And most of them come in with a little bit of funding, and then they expose you to other networks. But it's good for founders to do their own due diligence with which accelerator to work with, and look into the actual sector, because what you'd find is different industries require different expertise, and you need different type of capital for different types of industries. So if you're heavy on capex, then you need to have a lot of money, and you need investors who are comfortable to give you that money, and a network that is going to be able to raise. So the whole play is about an ecosystem. Whether you're getting funding from angels, whether you're getting funding from these venture builders or accelerators, is what is their network that helps you raise more money, which is why you'd see people are flying in. You've had several cases of someone comes in as an expat or as a visitor to Kenya, finds a business problem, and raises a significant sum of money. And people are like, oh, is there bias in terms of how these deals are being processed? See, the reality of global finance is capital has networks, and it has network effects. Right. What we haven't solved as Africans, and this is an Africa-wide problem, it's just not a Kenyan problem, although the Nigerians are doing much, much better, is figuring out how to get more local money into early stage deals, and getting high net worth individuals to help. Because once you have vested interest in the company, especially if you're in B2B, a lot of those deals end up being solved over phone calls, and your early investors might play a critical role in the sustainability of a new venture.
So Soud, you mentioned somewhere therein that you really need to find an investor who's ready to give you your money. So in a situation where the investor is there to ready to give you the money, however, we also have a problem on the part of the startup where a lot of them really operate, I would say, in a kienyeji way, in an informal way. There's so many things that are not in order, which somehow eventually in the end gets in the way of actually them accessing these funds. The question then is, how does a business, how does a startup prepare themselves or make themselves investor ready so that when the opportunity comes up, there's not even a problem there?
Yeah, so the key thing in early stage startups, especially on the tech side, but any startup actually, is validation. Is there a business need? Can you prove that people are willing to transact for the product or service that you're selling? You start out very small, you prove your unit economics. There's no replacement for actually validating the idea. If you look at the startups that are very successful in at least raising capital, is they're very good at telling that story, they're very good at validating, and they're very good at articulating what the business is to the investors. But now you mentioned, a very common word in Kenya, kienyeji. It's like, so yes, you can start a business in a kienyeji fashion, but how do you take it up to the next level? Right. And I think there are successful businesses of late in Kenya. If you look at Chapati Mistress, she started selling chapatis on Instagram and kind of formalized the business. It's a successful business. Is that a startup? By all means and intents, it's a startup. You look at Big Fish, where Brad started and where he is now. I think he's got 2 branches, if I'm not mistaken. There is a way in which you either can grow as a business, get product market fit, but also attract more investment or make your business more investable by actually formalizing the business. So it's like the basis of accounting. Where's the money coming in? Where's the money going out? Are you hiring the right people? Not just hiring your brother and paying them by giving them accommodation. It has to run as a business. Getting the right resources, getting the right people, building teams, management skills also come into perspective. And then the key thing about startups as well is how do you play with other startup founders? So network is a big effect because, and we're seeing this in the Nigerian ecosystem, is startup founders invest in other startups. They help them raise money, get product market fit. There is a sort of community around founders because starting a business is not easy. You need thick skin, you need to take time out and really think through things. And most of the things that you probably start out doing will probably fail. So just that support network to get you to the next level is very, very important.
Right. Very well put. But now there's usually so much emphasis and dwelling on the aspect of capital, but I know it goes beyond that. Yeah. So if we're to look at even like the broader challenges that startups face that need attention that maybe may not get magnified as much, what would you say are the other challenges and what needs to be done really?
Yeah. So capital is a factor, but it's not the primary factor. So a little bit of capital will get you there, and then you need to figure out how to fundraise to get more capital. So yes, it is a factor, but I think the critical things are the network of support, operations, marketing and business development, just general guidance in terms of how much risk or which business functions should a startup initially do before they move on to the next stage and make themselves more investable. And then there's also now the issue of having the right investors early on. A lot of startups, once VCs fund, they would advise or want to take the startups to take a very different trajectory. And sometimes going slow is much better because you don't have that pressure of just to solve a single-sided problem. Where you have as a founder is the advantage that you have on what you bring onto the table is local knowledge, right? So let's say someone is starting up a clothes selling business out of Gikomba. Someone who is already in that industry has a much more competitive edge than someone coming out. And how do you turn that into a positive, and how do you turn that to be your upside? So I think it's the support network that we see that is lacking, and that's what we're doing with. We've got a small network called 254 Global of angel investors, and our approach to it was we will do it from a local perspective or locally driven perspective. One, because majority of the partners are Kenyan. The deals that we're initially sourcing right now, most of them are from Kenya, and we understand the space in one way much better than other people. So we're offering much more than capital to portfolio companies. It's advisory, general. We actually sit down with them on business development, trying to figure out where their challenges, how to price the products, and bringing in the right type of investors early on. Because if, let's say hypothetically, for one startup we have 20 investors. Out of those 20 investors, 10 are really vested, have a play in the local ecosystem. Each of these, and if this is a B2B business, if each of these is able to bring in 5 new customers, the life of that startup changes drastically.
Now, Soud, at the top of this conversation, you talked about the role of policy and regulation in just ensuring like the space for startups, is right and they thrive. What does that look like in Kenya? And I know you touched a little bit about it, but what do the policies and regulations in the startup space look like? Do they need modifications? Do they need more thought? What would you say on that? Are they enabling?
So I think a lot of what we're seeing now are the benefits of what was done during the Kibaki administration, making businesses easy to set up, clear SLAs in terms of, eventually the Uhuru administration also improved on the business registry side. So registering a business, legal entities, no restrictions on foreign shareholding. That's very critical, especially if you're attracting foreign capital. Then there's also support in terms of policy, taxation, local government programs. The Uhuru government initially tried, but not as much as if you look at the tax benefits that were there for SMEs during the Kibaki administration, much larger. So right now, a lot of startups are grappling with minimum tax. And then on the tech side, there's a digital service tax as well. Fine, it might be just 1%. But if you look at an industry like FMCG, where some product, your average margin in FMCG is somewhere between 5 and 7%. So that 1% hurts a business, especially if you're not cash flow positive.
Right.
So there's some things that need to be done and be relooked by the government in terms of creating an enabling environment for small businesses to thrive. And most startups are small businesses because you start from zero. You might be lucky if you're able to attract a lot of capital and have much more runway. But your average startup in Kenya probably doesn't have runway for more than 6 months. And that's where you see a lot of people side hustling. And we need to change that side hustle into to be a full-time hustle and career paths for folks around.
Now, Soud, since the onset of COVID-19 last year, we can almost no longer talk about doing business without talking about how COVID has shifted or even impacted how businesses are done. Now, in the space of startup, how has the terrain changed? Like for someone who's maybe now trying to get into this, how differently do they need to think?
Yeah. So as a big business, you need to realize that you're not only competing with other big businesses, you're also competing with, a micro business selling on Instagram. And the data is skewed on this, but from what I'm seeing is you'd find that a lot of people have side businesses and they tend to be mostly on the female side. So anything to do with fashion, beauty, accessories, IT accessories or mobile phone accessories tend to skew more towards males. But there are lots of females who have side hustles, from baking all the way to accessories. And a good number of them are very successful. But if you look at their cost structure compared to someone who has to lease out a stall in town, the cost structure is very different. They're probably working from their homes, and those who become very successful have figured out a way to cut down on the expenses in terms of storage. And they're attracting businesses online. So they don't really rely on walk-in traffic. There's a different way of doing business. A lot of businesses now have evolved so I think that has really pushed digital commerce in Kenya. So from your average brick and mortar business to your very small independent dealer in a very specific product. What selling online brings in, there is a level of customer service that is expected. Right? If you buy something online, you want to be updated. Has it been shipped? Is it en route? Am I being charged delivery charges? Am I paying before? Am I paying on delivery? If the product has an issue, are you tackling, what's your return policy? So a lot of these small things, especially in understanding the customer, now would have to become part of the business process. Where prior to COVID, you'll be like, come to my shop, buy, and take your stuff and you go. Right? That process now is very different. And you have to scale it to, if you have a business that has thousands of customers, you have to figure out a way to be able to manage with thousands of requests in any given day or week or month.
Now, with that said, I just want you to do a real quick forecast for us. What does the future look like for startups in the country? What should we anticipate now that, I mean, the statistics are really showing growth? It's looking promising, but like maybe what should we expect going forward?
So naturally with startups, there's a high rate of failure. So I don't think we...
Wow, prophet of doom.
But no, so there's going to be more funding for sure.
Right, okay.
I don't see, even with an election year coming in, and we're only just getting started. If you look at your average Kenyan startup is raising anywhere between 20,000 in terms of pre-seed, 20,000 and 85,000. That's the average. Right. Some go up to like the 100,000 to 300,000. This is dollars, not shillings.
Yes.
But we are seeing now pre-seed rounds of $1 million plus. All depends on the scale of the problem, the network, the founders. What early stage investors look at, especially foreign venture capitalists, is they're looking at what are the skill sets the founding team is bringing in, and that's the risk that pretty much is being priced at that round, and the opportunity as well. There'll definitely be more, and there are a few family offices locally that are looking into local investments. Folks in the diaspora now, especially the ones that are in technology, are looking at investing in back home. Similar to what the Nigerians are doing. So that's definitely going to grow. More funding is going to be going for startups. And then with all the issues that we're facing in real estate, lots of uncertainty, valuations are going down. I think that's going to be a plus side for startups because there will be alternate investments or asset classes for people to invest, for people with additional liquidity. And out of some of the startups will do ridiculously well, and that's usually a very small percentage, and that will bring in more activity into the region. But what we are seeing now is, especially in the technical arena, is you're seeing Microsoft has set up an office. Well, they've always had an office in Kenya. It used to be mainly a sales and marketing office. Now they're doing part of the product development and engineering out of Kenya. So a lot of the technical talent, including from blue chips in Kenya, are being sucked into Microsoft. That looks bad in the short term, but I think in the long run these are people who are tied into, a lot of them also came from startups. So they know what the issues are. They resonate with some of the problems. But what we're going to start seeing is this class of people investing back into the ecosystems. They have more liquidity now. They have secure jobs. The offers from Microsoft are fantastically good. They are outpricing everyone from the market. On the flip side, it's creating problems for startups, but I see a more vibrant local investment community. And lastly is there will be one or two success stories that are going to bring in more people around. And the reality is the face of business has changed, partially due to COVID, partially due to market conditions. And the opportunities that will present themselves, and the state of startups are changing. Like 3 years ago, someone like Brad or Sumo, Big Fish, seeing him as a startup wouldn't have been whatever. You're seeing more food and beverage startups coming up. So I think the opportunity, it's for small businesses. I think this is the right time. And then there's also now. Had a conversation yesterday, but there's now the net effect of the Jumia mafia who are influencing the people who had options with Jumia, and those options are vested and now in other startups. But however way people look at Jumia, Jumia has changed the face of e-commerce in this, not only in the region, but in the continent. And the people who used to work for Jumia are changing the way e-commerce is being done in Africa, in either coming in as angel investors, or they're coming in as founding new startups, or joining other new startups. And there will be a net effect of more growth in digital commerce for sure.
Oh my God, Soud, I can't say thank you enough for you to you for making time to come and share like a really 360 picture of what the current set of startups is in the country, what the challenges are, where the opportunities are, what needs to be done on policy. Thank you so much.
Thank you very
so
much.
For those of you watching back home, thank you very much. That was Soud Hyder, angel investor. I'm so sure I'm saying that wrong, by the way. Angel investor and startup consultant. Thank you so much for watching. Remember, you can send your comments, feedback to our social media handles at Metropole TV KE on Facebook, Instagram, and Twitter. Don't go anywhere, because in a very, very short while, we'll be back with Metropole News at 1.